the U.S. housing market takes a $2.3 trillion hit so far. And regardless of whether you're seeing price drops yet in your city, you may not be as insulated as you believe. I still believe we are in for a serious downturn in the U.S. housing market. Now, since the housing bubble burst in early 2022, we are seeing some of the largest home price drops since 2008. Now, this should be especially alarming for anyone who purchased a home around the price peak of last year that may find themselves unable to make their mortgage payments or need to move anytime soon. Overall, the U.S. median home price has dropped around 11.5% since May of 2022. That reflects about a $50,000 price drop nationwide in less than 1 year. And now with the expectations that in March, the Fed will raise the interest rates another 50 basis points, this could drive mortgage rates even higher than what we're seeing right now and be yet another disastrous blow to the U.S. housing market. Now, with this being said, there are still markets in the United States that just don't seem to want to cool down. And yet other markets have seen price reductions way lower than the average median drop of 11.5%. So now let's take a look at what cities haven't woken up yet, whereas buyers are still overpaying. And we'll have a look at what markets are tumbling the fastest and the hardest. So let's check it out. Welcome back and thanks for watching. Now in this video, we're going to talk about some of the areas that buyers just won't let the housing market cool off. And we'll also take a look at what cities are seeing the largest price reductions so far this year. I think you're going to be surprised when we look at what cities are just in denial. And despite the higher interest rates, they're just not cooling off. So if you're on the sidelines waiting to buy or sell, you may find this video very interesting, as this current housing market crash has its own unique stubborn behavior. But guys, regardless of what you're seeing in your market now, I am here to warn you that we may still be far from the bottom of home prices as the effects of this economic downturn play out. And you must realize that it does take longer for the housing market than any other market to show its downturn. And this is contrary to the way that we see the bubble inflate, as this appears to happen much more rapid. And we learned that from 1997 to about 2006, when we watched the most recent housing bubble finally explode in 2006. And it took almost 6 years before we saw the bottom in 2012. And in that time, we watched an estimated 4 million U.S. households be foreclosed on and kicked out of their home. And from 2020 to 2022, we experienced the largest and fastest growing housing market bubble than we've seen since the formation of the United States of America. Now, looking back, it's easy to say that, but what fueled this housing market bubble? Well, the federal government is said to have printed more money in the last 3 years than we have in the last 200. Also, the Fed dropped the wholesale interest rate to an all-time low of almost 0%. This created cheap consumer debt, and this created the lowest 30-year mortgage interest rates that we've ever seen before. And during the last several years of the pandemic, the federal government appropriated about $2.3 trillion in stimulus for both consumers and businesses. And to top that all off, the federal government put in place moratoriums that prevented banks from foreclosing on mortgages that were in delinquency, and also prevented landlords from evicting tenants that were behind in rent. And in many cases, this allowed people to save quite a bit of money. And now let's take a look at this chart that during the period of this massive money printing and stimulus, Americans had more money in their savings accounts than they ever have before. Then by the tightening inventory of supply chain issues, there just weren't that many houses available for these anxious buyers to purchase. And then the housing market really launched out of control. So then finally, the federal government decided that inflation was out of control, and they thought it was a good idea last March to start raising interest rates. Duh. And then they decided to raise interest rates faster than ever before. Now, I want to focus on the word fastest because, I think that maybe this is the new buzzword. We've had the fastest inflation, the fastest home price growth ever, and now the fastest rate hikes. This could be the most perfect, fastest trifecta. All right, guys, if this is your first time watching, I'm Todd Sachs. I'm a real estate broker here in Maryland, and our channel is dedicated to keeping you informed on everything real estate. If you like it here and you haven't done so, please consider subscribing to our channel and smash that alert bell, and you'll know every time we upload content. And as always, I like to say, don't keep this information to yourself. Share it with your friends. The share button is below. So now for some market updates. As I mentioned earlier in this video, overall, the median home prices in America have dropped about 11.5%. And this reflects the largest drop in home values since 2008. Now, what does this mean for you if you're sitting on the sidelines wondering whether you should buy or sell in the near future? So let's take a look at some cities where sellers are still seeing the highest price appreciation. The buyers just won't let the market cool off in these areas. And then we'll take a look at some of the areas hit the hardest, as well as my watch list. Okay, guys, so for today's data, we're looking to Alto's research. So if you're looking to move to Knoxville, Tennessee, you'll be surprised to learn that the median price is up a staggering 32.6% from just a year ago. This is reflecting an all-time home price average of about $465,640. This means that in the last year, the median list price has increased $114,542. Next up is El Paso, Texas. This city's average list price has risen 13.8% since the Fed started their rate hikes in March of 2022. Last year in El Paso, the average 90-day list price was $271,312. The new average is $308,664, reflecting still a year-over-year increase of 13.8%. Now, guys, that's more than double the said current CPI inflation rate. Now, next on the list is Charleston, South Carolina. I personally love this city. Since last year, the average list prices are up 8.9%, reflecting a year-over-year increase of about $53,000. Your new 90-day average list price is $647,411. Now, let's take a look at the cities with the biggest drops. And to all of my Northeast viewers who said that the housing market would never drop in your area, this next one's for you. All right, Boston, Massachusetts. From a year ago, the 90-day average list price was $1.4 million. I hate to break it to you guys, but the new 90-day average median list price is down $508,000. Your new average is $891,688. Now, guys, that's quite a reduction of about 36.3%. Up next, Boise, Idaho. This city peaked in April of 22 at $695,700. And now list prices have tumbled 22.6%, dropping in price $156,980 to a new 90-day list price average of $538,720. Okay, next is Austin, Texas. Austin peaked in July of 22 at $817,560, and now the average list price is down around 14.5% to $699,187. And guys, that's a big drop of $118,000. Sarasota, Florida, average list price was $783,600 last May, and now 14.4% less at $670,519. And that's a big difference of more than $113,000. And for those of you that said that the housing market isn't crashing and that home prices would only continue to rise, here are your statistics of just a few areas where we're seeing some pretty hefty price declines throughout the U.S. So guys, now what do we have to say to the buyers that have purchased homes in the last 2 years? I say that if they need to sell anytime soon, they will be way underwater. And so far, the price decreases that we're seeing in the cities that are crashing the most are far exceeding what we experienced in 2008. And I think this is just the beginning. And for you guys that are not seeing price declines yet in your market, stay tuned, because the next round of rate hikes that we're expecting to see in March may finally take its toll in a city near you. Now, before we go, I want to show you what I have on my watch list, because these areas just so happen to have experienced the highest price growth. These areas are indicating a major buyer's market coming soon. So be most careful if you're looking to buy in these areas, just my humble opinion. So first up on the watch list is Naples, Florida. Now, Naples has seen the largest year-over-year growth, and in my opinion, it's about to crash hard. In February 21, the median price was just $645,784. In just 2 years, houses in this city have climbed to $1.1 million. That's an explosive, record-breaking 70% increase in the average home price in just 2 years, reflecting the new average 90-day median list price in Naples rising $454,216. This meter at 32 is showing that we are very close to a buyer's market. So if you're looking to buy in Naples, this meter at 32 is showing it is very close to a buyer's market. Up next, Farmington, New Mexico. This meter indicator is 31. This city grew its average 90-day list price 58.3% in less than 2 years. In February of 2021, the average list price was $199,508, and it peaked in November at a whopping price of $315,808. Look out, Farmington. And now let's check out Miami, Florida. This city looks super volatile. Look at these messy lines, ups and downs. It looks like a bad EKG. Miami just may turn to a full-blown buyer's market very soon. As of now, Miami is still showing on the meter as a slight seller's market at 43, but I think that's about to change. Guys, thanks so much for watching this video. If I haven't covered your city and you'd like more information on your specific market, go ahead and send me an email. I'll be happy to respond with some market stats. And no matter whether you've seen prices decline in your city or not, I think it's only a matter of time with rising mortgage rates and the state of our economy and a looming recession ahead that it's fair to say that no city will be untouched in what I feel will be an overall price decline in housing from what we saw in the peak of 22. Okay guys, that's a wrap. If you like this video, you can hit the thumbs up. It'll let me know that you did. And as I mentioned before, don't forget, if you haven't already done so, hit the subscribe button, smash that alert bell. You'll know every time we upload content just like this. See you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.